Hey, this is Trader Travis, and I just received an email from one of my subscribers of the Option Profit Formula community. To join that community, you can just go to opfnews.com. And so I'll read the email they sent. They said, I'm tired of being at the mercy of big market swings that wipe out in a few days the gains that took years to build up. For example, half of my retirement investments evaporated in the meltdown of 2008. Now I'm getting close to the end of my working life, and I would like to know how to successfully manage my investments in order to enjoy retirement without having to stress over money. I want to call the shots and direct my own income growth. And so what I wanted to do is dedicate this video to this person, because what I wanted to do is show this person, how to spot and profit from these market crashes so that they, as well as you, won't have to suffer anymore during any more stock market crashes. Now, the period that this particular person was referring to, they call it the lost decade. And if you look here from about 1990, and actually let me just draw a line so I can show you a little bit better. Okay, so from the beginning of this line here to about 2009. Okay, so 1996 to 2009, stock market went up, went down, went up, went down. And then at the end of March 2009, it essentially went nowhere. So they call this the lost decade. And they call it this because 10 years worth of gain was wiped out in just a few short years. So for buy and hold investors, they are essentially a decade behind on their growth that they expected. And, this is pretty heartbreaking, because I talked to people and they were going to use that money to pay for their kids' college, start retirement. And so this lost decade wiped out those dreams of doing all those things. But the most disheartening and painful part about it all is that the opportunity to profit was there. Not as a buy, as a buy and hold investor also. I'll show you. Matter of fact, in a second. But there was an opportunity because the market had these large swings. And what I want to do is show you how to spot these swings, and also one of the tools you can use to profit during these swings. Now, I want to show you 3 ways to be able to spot these market crashes. 2 are one, you would need an investment subscription to a service. The third one is a free one. Now, the first tool is something we call Market Club. It gives you precise entry and exit signals. You can learn more about this software at mcoptions.com. Now, what you are looking at is the S&P 500, and we were just looking at my broker chart here. So I'm going to look at the same thing, but with this automated software. And so these little trade triangles right here give you the entry and exit signals. And so the furthest back I can see on this particular chart is about July 2007. And if you're aware, the market topped out in August of 2007. So you can see here that, let's say most people were scared of a crash. So this little red trade triangle would have been your exit. So it would have got you out. This little short dip right here told you to get back in here, immediately get back out. And so this big dip right here was the most horrific for most people. You would have missed all of that using this software. Okay, then it got you in here and you would have got out here. So what I did was use these dates. The great thing about this software is these entry and exit stay on the chart. So you can always trust but verify. It's what the military taught me. People are always so skeptical when I tell them, hey, I use this software. It tells me when to get in and out stocks. And they're like raising their eyebrows. It sounds too good to be true. I know, because I was skeptical in the beginning. But as my mentor says, skepticism is a two-edged sword. Yes, it prevents things, prevents harmful things. It keeps harmful things out of your life, but it also prevents you from using stuff that could benefit you, because you're so skeptical. You never let your walls down to benefit from stuff like this. So, I don't mean to really be a jerk about it, but I just got to the point where I got so frustrated. I'm like, look, you keep your opinion. I'll keep the money in my bank account, because I've been using this software for years. I've never lost money using it on a year-to-year basis. And again, all these stay on the chart. So anything I'm showing you here, you can go and verify this yourself. Again, go to mcoptions.com. You can sign up for a trial. It's only a few bucks, and you can test all this stuff out yourself. But what I'm going to do is use these dates right here. July 1st, 2008, and then May 4th, 2009, and this also exit. And so here are the dates here. I actually have those written down here so you can see these. So now I'm going to go to my broker account, and I'm going to show you a simulation of a trade. Now, this is using something called a put option. If you don't know what a put option is, you can actually just Google puts and calls. Just read any articles on this page. It'll explain what puts and calls are. And I have an article here on this page right here on this website right here. So what puts and calls allow you to do is put options allow you to profit when a stock falls in price. Okay, I will repeat. Put options allow you to make money when a stock falls in price. So using those dates I just showed you here, if you just were to buy one contract or one put option, June 127 put option, don't worry about what a June 127 put option here is, just understand that you can make money when stocks fall. So you buy this contract, it allows you to make money when a stock falls in price. And again, using these dates I just showed you here, the entry and exit date 7/1/54. So you can see the entry here 7/1/2008, bought a put option here, and then on 5/4/2009 I exited. Now that put option, that contract had increased in price almost threefold, so the profit there was $26.52. Now the way option contracts work are the quoted price you see always has to be multiplied by 100. So if it was 10.175, we multiply that by 100, and that tells you how much it cost me to buy that contract. So roughly $1,000, 1017. Okay, this was my profit, 26.52 divided by 1017.50. So just that one contract, I had a 261% increase in that contract. This is why in the beginning I said it's my belief that people could have easily doubled their account. Now that was just on the downturn. Okay, remember how I started this video off talking about the lost decade, how the market went up, down, up, down. If you were able to spot all these swings like this, you could get in position to benefit just with these simple contracts, puts and calls. Okay, and you can use the tools I just showed you here. One of the tools is Market Club. Another one, is Investors Business Daily, which I'll point to in a second. But what I want to do now is look at the upswing, 5/4/2009 to 5/25/2010. So that's these two right here. So what I'm going to do is pause this video. I'm going to pull up those dates, and so you can see how much you would have made on the upswing. Okay, I'm back. Now with this example, I had to exit the trade a little earlier. So, I would have had an exit date on 5/25/2010. So I had to get out a couple of months early due to something we call a 30-day rule, which I don't have time to get into in this particular video, but I teach it in one of my training programs. But we're going to roll with whatever numbers they show here. For some reason, my broker platform is not showing the profit on this trade. So let me just go ahead and take the exit price and subtract it by the entry price, 940. So this contract almost doubled in price. So my profit on this is 9.685. So let me just divide that by 9.40. So that way you can get the percent return. So on the upswing, even getting out early, we would earn 103% return on our money. Again, that's just using a simple tool called puts and calls. Essentially, you could buy a put option on an upswing, buy a put on a downswing, call, put, calls. Okay. Now, there's several strategies you can use. You don't just have to use puts and calls, or like 300 plus option strategies you can use. And I wouldn't necessarily say you would even stay in your trades this long. Okay. You could be in and out in a matter of weeks, but this is just an example because a lot of people do not know this is even possible. Okay. So that's method 1 of 3 to spot a market crash using Market Club. And a quick, before I move on to method 2, a quick bonus, feature of Market Club is if you have a mutual fund. Now, this is, I think, in Invesco High Income Trust Mutual Fund. They also have trade triangles for mutual funds. A lot of people lost a lot of money, like 50, 60% of their mutual fund retirement account during that market crash. But what if you had trade triangles like this, letting you know when your mutual fund will most likely fall in price? Now, this is Invesco. Here's another one that most people are aware of, Vanguard, Total World Stock. Okay, same thing, precise entry and exits. Or, mutual funds have different characteristics, so you can't really trade them like you can stocks, but you can at least prevent yourself from losing a ton of money by getting warned when a drop is going to happen. And what I did was show students a technique a millionaire taught me in my program, the Option Profit Formula Success Academy. So in the bonus section here, it's There are two things actually. Well, we'll get to the 4 stages of market crash here in a second, but buy and manage secrets. It's just a strategy I use on a 401k mutual fund account during the last market crash, of 2008. Okay. We use this strategy to triple our retirement account. Again, a lot of people do not know that's even possible with a mutual fund account. They buy, hold, and pray. They sit and they lose 60% of their money. Again, I'm recording this video because I'm dedicating that video to that person. I'm saying, look, there are tools and strategies out there. You don't have to sit and watch all your hard-earned money go down the drain. All right. But it takes mentorship. It takes education. Education diffuses fear. I was fortunate enough to be mentored by a multi-millionaire to learn all this stuff. You know, I tried the self-education route, what they call the poor man's journey. Guess what? I didn't get anywhere. You know, matter of fact, I know I donated at least $9,000 of real money to the market before I realized that, you know, this is not as easy as I thought. And if most people knew how hard it can be, they wouldn't attempt to do it on their own. You know, so, you know, I started the whole hope to get lucky kind of thing. But I came to quickly realize that succeeding as an investor, it's not going to happen, you know, by luck. This is a process of education, not hope. But anyway, so that's one of the strategies that someone could use, you know, using a tool like Market Club in their mutual funds in conjunction with the mutual fund to possibly triple their mutual fund account during a market crash. Now, of course, by law, I can't, you know, I'm not promising you'll be able to do that, but that's what we did. And I recorded it and I showed proof and I showed people the exact strategies and steps that we use to do that. Okay. Now, the second method to be able to spot these market crashes is Investors Business Daily newspaper. Been a subscriber of them for probably 15 years. They have something called The Big Picture, and they give you with their opinion on the market. Okay, so today's action, or yesterday's action, modest losses and higher trade, current outlook, uptrend under pressure. So, all right, that's currently. So let me pull up, let me do a 2-year chart here, show you the last a pullback we had in the stock market, okay? So let me take all this stuff off here, and this circle actually is getting on my nerves. So just look here, back in about October 2014. So this pullback right here. And what I want to do is pull up the Investors Business Daily newspaper from Friday, October 3rd, 2014. Again, the big picture here, market and correction. So if you are a subscriber of Investors Business Daily, you can kind of just look here at the market pulse every day, and they will let you know what the market is doing. Is the current uptrend under pressure like it is now, or are we in correction territory? Okay. So again, these are the tools that sophisticated investors use to kind of manage their investments. And method 3 is something I'll call the 4 stages of a market crash. A lot of people are unaware that there are 4 distinct stages of a market crash. They happen each and every time. All right. Each and every market crash, I've walked my students through the exercise. Matter of fact, I always tell them, trust but verify. Don't believe anything out of my mouth at face value. I want you to verify it yourself. So that way it becomes your truth. It's my truth, but I want it to become your truth. And so you can see these. Matter of fact, let me zoom in here. So these work on market uptrends or downtrends. So I already showed you Market Club. So now what we're looking at is around 2007. So this was when stage 1 happened, stage 2, stage 3, stage 4. And so let me scale out again so you can see it in relation to where it was. Okay, so you would have been able to get out around stage 3 or 4 or buy that put option, whichever way you want to trade, and been able to save yourself some heartache. So you can see where this is in relation to the top. It doesn't predict exact tops and bottoms. I haven't found a method to do that, but you can see here it would have saved you a lot of heartache and been able to double your money like we just showed you, like I just showed you here a few seconds ago on that investment example. Okay, so now pulling back up Market Club, you can see that either method works. You know, you can use Market Club, you can use the manual method, the 4 stages, you can use Investors Business Daily. It really doesn't matter. You know, the main message I'm trying to convey in this short video is that, you know, it is possible to spot a market crash and it is possible to profit from it. You know, I've seen it in my own life. I've seen it in the life of my students. And, you know, something I said earlier, education diffuses fear. I get a lot of emails from students in my training program, and they say that alone has been priceless, that peace of mind. They no longer fear anything the market throws at them, because they are able to profit in up, down, or sideways markets. And the more educated you become, the more you're able to take advantage of these opportunities, so that way you don't suffer and lose money like the average investor. So my final takeaway is, don't be average, be above average. Use the tools that above average investors use. So you take care. I wish you much luck. And if you want more training like this, just go to opfnews.com and that will add you to my private email list. All right. Talk to you soon. Bye-bye.